All right, staying on retail, we're also pulling apart the latest from Home Depot. The stock, you're seeing some mixed action here right now. Company topped expectations on the top and bottom lines, but guys, getting dinged, I think, on two areas. One, transactions down 4.3% year over year. What does it exactly mean? Less traffic to Home Depot's online site, likely less traffic to their stores. Why? Because the housing market has started to really pull back. Two, they reaffirm their outlook. And the way analysts are reading this, just based on a couple notes, I'm seeing it right now, that points to a potential fourth quarter slowdown in sales. So those are the two areas. That's why the stock was down, but that's why the stock is getting dinged here. Maybe not seeing that big burst or enthusiasm on the stock because of those 2 points.
Right. On the latter point, maybe it's kind of surprising to folks that this quarter looked so strong. Why not raise the full year outlook, right? And so what does that then imply about the next quarter, right? So with that comparable sales number up 4.3%, that's a full percentage point better than estimated. U.S. comps looked even better on that metric. So if that's the case, and you're not seeing that increased outlook for the full year, again, there are some implications there potentially.
Well, yeah, and maybe it is the longer term trend. I mean, over the course of this quarter, you mentioned 4.3% decline in customer transaction, but over the course of this year, that's actually a 5.1% decline that they're seeing there. And then additionally, you are looking at the average ticket. Now, again, if you have less customers, you've got less of a base that you're operating on. The average ticket actually had moved higher over this past quarter. That was up by about 8.8%. But just reaffirming to your point, the full year guidance, perhaps not enough for investors to really send HD shares zooming to the upside.
And it's, this is not a stock call by any means. I'm just trying to explain what the market might see. Going forward, Home Depot next year is up against some very tough sales comparisons. So you could be looking at the start of a run of slightly negative same-store sales for this company against a backdrop of a slowing housing market. And the stock is still priced for perfection relative to the S&P 500. You put all that together, it is going to be hard, I think, to get Home Depot and Lowe's working higher next year.
And by the way, inventories at Home Depot up 25%. So that's an area that we're still continuing to pay a lot of attention to.